So let's look at some of the assets that you can trade on OPC Markets. Now we have a full suite of different assets. You have commodities, of course, that's energy, metals and soft commodities ranging from WTI and Brent contracts to spot palladium, platinum, cocoa, coffee, everything in between. So full range of commodities. We've got ETFs, we have stocks, forex pairs, as well as indices and cryptocurrencies. So a fairly broad suite of markets to trade from. Now just drilling into what some of these actually mean. If you're new to the world of trading, then we have first up stocks. Of course, those are individual company names. You buy shares in those companies. You buy a small claim on each of those companies, and usually the markets are open for set periods of time. In London, that's from 8 a.m. London time through till 4:30. In the US, it's 2:30 London time until 9 o'clock at night in London. So it's a market that shifts. They're not open all the time. And you do need to bear in mind that you could see some adjustments on your positions with stocks because of dividends. If a dividend is paid, then usually the stock, an ex-dividend adjustment will be made to the stock, and therefore the stock price on the chart will fall, but an adjustment will be made to your account, which will reflect that. So you will not lose anything in the bargain. Now we do have ETFs, these are exchange traded funds. We've got a full range of these. US oil is one, for example, trading the oil market. We also have things like QQQ, the NASDAQ Tech ETF, ARC, K, the innovation ETF from Cathy Wood stable. So there's a broad range of ETFs. Now these are baskets of stocks or particular assets. They may be leveraged ETFs, therefore they may produce a larger, 2 times return on the daily movement of a particular asset. For example, you can get bond ETFs where the return is twice the daily movement in that particular bond. For example, the 20 years plus US Treasury bond ETF. We also have futures markets. Now, worth bearing in mind that unlike trading the futures in oil, for example, the ICE in London for Brent or NYMEX for WTI, our futures markets are not requiring you to buy 100,000 barrels of oil. They're also not set for expiry. So what we do with our futures markets is we roll them over ahead of expiry, some days ahead of expiry. If it's particularly volatile, we may choose to do that even further ahead of time in order to avoid as much volatility as we can. And what that means is we roll the contract automatically into the next month on the contract. So the front month becomes the back month, maybe a couple of days ahead of time, and that's usually on a set day each month, every third Friday or every fourth Thursday or whatever it happens to be. And you can find all that information in the platform. If you look in the key statistics tab in the platform, you'll be able to spot all that information. It'll tell you minimum trade sizes. For example, 10 units is our minimum size for trading oil. Now that means that it's 10 barrels of oil, and so if Brent is trading at $60, it means your position size would be $600. You can find information on the margin and leverage requirements, and also overnight funding charges. You do need to be aware of those. To keep positions open overnight, they may be subject to small fees in order to cover the cost of doing that. So that's basically a roundup of some of the assets that we have on the platform. Do dive in, have a look, explore, use the search function, and do check out all the different assets that you can find here at OPC Markets.